Hi everyone, Larry Berman here. I've got a very, very foggy crystal ball, but here's what's on my radar this week. So when we go scroll through the economic calendar this week, what we learned is the economy remains stronger, the labor market remains firmer, consumer demand remains, I wouldn't say robust, but it's holding up fairly well. What we learned from earnings call this week is that consumers are trading down from Costco to Restoration Hardware to Dollar Tree. All the CFOs and CEOs commented that consumers are still spending, but they're not spending on more discretionary things. They're spending more on staples, and there's this transition going on. Still very, very early in that, but people are starting to feel the stress of higher interest rates. But on average, in aggregate, no one's losing their jobs yet. And that remains the critical thing about why the economy remains hot, why the PCE deflator is still very, very strong. When we got the numbers Friday morning, you can see an uptick in the core year over year and monthly numbers. Loretta Meester commented on this on Friday and said, based on that, she's going to up her numbers. She's known as a bit of a hawk. Cleveland Fed has this, mean inflation number. The Cleveland Fed's known more for their inflation research. And so a little bit more of a hawkish bias there for sure. When you look at the sentiment numbers, while the 1 year UMich final sentiment number came down a bit, we're still relatively elevated on the longer term numbers. There's been this very slow creep up. So that trend really hasn't changed. But sentiment is very, very weak, in line with, people expecting that change. And as Ernest Hemingway famously said, things happen very, very gradually and then suddenly. We just haven't seen that suddenly yet. We didn't see it in earnings. Of course, NVIDIA this week and Marvell Technologies and the excitement over AI, really, really defined the week far more than headlines crossing right now saying, okay, X date is June 5th. Yellen's come out and said, we're out, we're going to be defaulting by June 5th. And you reverse everything and do the math, and we need a deal in the next 48 hours in order for it to get through Congress and Senate. Not that it would be signed, but an agreement in principle would alleviate the markets. All kinds of news, both good and bad. We're getting closer. We have a deal. That was behind some of the excitement, into Friday's close as well. And so how's it going to all play out? I think with the political polarity as it is, it's going to go right down to the last, minute. And I'm willing to bet there's some extraordinary measures that can get them from June 5th to June 10th, furlough some non-essential workers, call that, the IRA, the tax collectors, whatever. But you get to that June 15th, you've got tax money coming in. That gets you to the end of June. Apparently, there's some money that will be released in July that would get you to the end of July. My sense is that they know all this and it's still going to play out, but they are getting closer. So markets focusing on that. Are we going to get a sell the news given the euphoria in tech and AI? When you look at the fourth biggest stock in the S&P 500 today, and that gap in valuation, from what I've read, I've not vetted this myself, the biggest jump in a large cap tech stock in the history, modern history, call it the last 50 years. So, what's going on here is it's not speculative like the .com, but we're very, 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 very early in the days of tech. So there could be a lot more here to go. Crucified today in the media was Cathie Wood, having been invested in NVIDIA and apparently somewhere in here got out of the position. I'm not going to comment here because I missed it too. I bought it when it was really depressed. In here, 110 area, I was a buyer. In here, I was out. I actually went short a little bit. Very, very painful trade. I put out some calls again on the gap to get shorter at 4, equivalent of what would be 460 break even. So, I try to short it again here. I do think it's a bit of a bubble developing here, but there is absolutely no timing it. So if you did want to play the long side of this, look at this ETF, AIQ. And it's a basket of artificial intelligence and big data names. Obviously, NVIDIA, the leader of that list, Meta. You see the names there. Those aren't pure AI companies. In fact, none of them are, but they're all saying they're incorporating AI into what they're doing. There's a lot of cloud here. There's a lot of overlap. But really, it's the big tech names. But that would be an interesting ETF. When you scroll down the list and look at some of these other names, you get some more, AI type, more focused AI types, but there's some robotics in here. There's all kinds of other things. Came across that ETF this week. I'm looking to buy put spreads on it to buy a dip because I think it's pretty overcooked right now. When we look at the NASDAQ, where's resistance here? We've broken some of the retracements. We've clearly broken out from the high that we saw, in August of last year. What stocks are leading? What are our resistance? When you kind of run down the list, you can see Microsoft stands to mind. So to me, is Microsoft the leader here, one of the big leaders in this tech boom? Is Microsoft going to be able to get above that extreme high from late 2021? To me, the next few weeks, that's going to be a big test for the market. If Microsoft can't break out, which is the leader, NVIDIA, we already know, broke that high, but that's the pure AI play in terms of the semis and what's gone on there. If you look at everything else, Apple's up against the high, Amazon and Google way below, CRM way below, many of the names way below still, and it's why overall the Qs have not broken out or anywhere near that high. I think we got to watch Microsoft here. So my message has been caution. That hasn't changed on the broad markets. Still the extremely narrow leadership. I want to have a look at the RSP equal weight S&P 500 ETF here. And again, very different story. Now, this week, I sold some S&P 500. I put a little bit in, so half my U.S. large cap exposure is now in equal weight S&P 500. I did that trade this week. This is not a go buy the equal weight S&P 500 trading signal. This is a tactical rotation from me being overweight market cap, i.e. large tech, and now recognizing that massive underperformance this year. When you look at it from a what's the index done this year versus the S&P 500. Again, average stock this year still down, S&P 500 still up. Where's the leadership? Let's look at the pure tech indexes and ETFs. You can see where it's coming from. Anyways, still message of caution, folks. Have a great week. We'll see you on BNN at 3 o'clock.